Hello everyone. So today I want to do a review of the 3:30 p.m. session macro for the previous week. And from ICT concepts, like the 3:30 p.m. macro is a time when we anticipate the reversals. So if we see the right signals in place on the higher time frame, lower time frame, and the other relevant PD arrays, for example, like the new week opening gap, new day opening gap, and the first presented fair value gap for the last 3 days, AM and PM session, then that will give us reason to enter a trade in this macro. So this is a macro that I've been like focusing in the previous week. So I want to share with you some of the findings. And what I usually do is like I have, as ICT is teaching, I have different templates. So I usually have a template for, as you can see here, for like the new day opening gap, where I just do all my new week opening gaps and new day opening gaps. Then I have the opening range template I use. And then I have some templates for like session liquidity, where I delineate like all the session, like the Asian session between 8 p.m. to midnight, and the London session 2 to 5, AM session 9:30 to 11, lunch 11 to 1:30, and PM session. And I look how the liquidity goes over the week and how it's being engaged. So I usually just like go around these templates. I also have like a template for each day for like the higher time frame PD arrays. And this helps me to like rotate through them. And as ICT is teaching, is also good to have like a naked chart. And then as you rotate to these templates, you will get indication about what price is doing. But let's get into it, into the 3:30 macro. So if we take a Monday, for example, I'm gonna have a little look through my notes as well. So Monday it was 19th. So we see that 15:30, at that time, 15:27, we had a lower time frame run on stops. And we were also, as I mentioned here, first fair value gap of previous Friday. So this is previous Friday AM first fair value gap. So if we see, this would be this one over here on the 1 minute chart. So we are around the mean threshold. We took sell side, and we also are in the event horizon. So event horizon is the midpoint between two new week opening gaps. So we had the new week opening gap from Sunday, 2nd February, and then the new week opening gap from 19th of May, which was actually the current new week opening gap. So if we take the fib, we see how here in 27 we reach it. So usually when price reaches the event horizon, it can either find resistance and come lower, or it can find support and it can go higher. And as we see, like we've been going down in the PM session, we reach the time when it's for a reversal. We took the sell side in place, and we are in the event horizon. Also, we seem to be finding support over here. So we leave a portion open. So our sell stop can be like, we don't want to reach further down. So this portion should be open. And we also see that we have touched the PM range of previous Friday. But notice how the bodies are stopping at the 75 AM range of previous Friday. So we have pretty good reasons to go long. And we can target the swing high, that's pretty obvious. And we can have some other objectives. As I mentioned here, there's a 15-minute fair value gap from 2 p.m. So let's see that. So we are 15:13 here. And it will be this 15-minute fair value gap. And there is another 15-minute fair value gap over here from 13:45. You can see how it's moving here. And this one coincides with the swing high. We also have two first fair value gap PM session from previous Thursday. if we want to see this one, you should find it here, previous Thursday. If we look on the 1 minute, and then we have also from the current day, from the Monday 19th. And notice how price is going above it. So it reaches all of these objectives. But you could have just a low hanging fruit, and this could be like a setup, enough for a setup, or even into the first fair value gap, as I was mentioning. There's one over here. So this could be enough for a move. And unfortunately, I can't go into the 15-second chart because it expired. But I will show it for other days. So the last bar, it's yeah. But even on the 1 minute, you could take a trade using these reasons. So let's go forward and look for Tuesday. Just gonna drag these templates over here. So here was a little trade I noticed after 1530. So price 1500, it comes here, it takes the previous day low. So I see here. Actually, I think this is something else. But yeah, but basically this was the trade over here that I wanted to show. Yeah, so this was the first fair value gap of previous Thursday, but time is not 3:30 yet. And here we have like a 22 model. We have like a bullish breaker, so low, high, lower, low, and price is coming here, touching it. And this was the trade that I was interested in. So we notice how 1540, this is the first fair value gap of the AM session. And in here, it's a small trade, but still enough to be profitable. Price comes here. The bodies are staying below the first fair value gap. And here, this was a nice stop hunt. It takes the stops, but we want to see this portion stay open if it's going to be a short. And notice how the bodies are staying below. So our stop loss can be added here a few ticks above it. And then we have this discount fair value gap. So here we can enter a trade. From the low, notice how it's perfectly touching it here. So after we see this stop hunt, our entry can be here, like one tick below the low of that. And then we target here. This could be the low hanging fruit. So 413, let's say 1412 to 393. That's like around 20 handles. That's enough of a move. And then 1550, notice how price finds support at the midnight range. So this is the time between 00 and 0030. Takes a stop hunt. We're into like a order block. And then price goes higher. This is the other macro. So 1530 to, we have a reversal macro most of the times. And then 1550 also to 4 p.m. There's another move here. Yeah, but this was the move that I was interested in. And here you see how price is stopping below the 50% level, consequent encroachment, or of the Friday first fair value gap. So it's this one, AM fair value gap. Notice how it doesn't even touch it. And then, but now time is 4 p.m., so we're not so interested to take a trade anymore. Let's go forward to Wednesday. This was my favorite setup for the week. So here we have Friday, Thursday, Wednesday. So Wednesday, we had the last 3 days. This is actually on Thursday, but I will change it now. So this is Tuesday. And then I want this one also. Let's take it one by one. So so here we are on Wednesday. And then we want to see the previous day and the last 3 days. So if we look at the previous day, it will be this one. I will log this in. And now the previous 3 days. So the highest high and the lowest low. So it will be, this will be the lowest low, and the highest high is going to be from Tuesday. So over here. So this is the low on Monday. And notice how at 3:30, the price is running the stops again, similarly to how we saw on Monday. Or was Monday? Was Monday. Notice that. The same style of sell stops taken. Now on Wednesday. And also, we are at the previous 3 days. And then we see this shift in market structure. And then we have the bullish breaker. And then we have multiple targets here. So we have like this BC over here, this CB over here. And then we have the midnight open. And then here is like a first fair value gap. Click it properly of Wednesday. If we drag 330, 331, the first fair value gap, extend that over, and notice how price is coming perfectly here. We also have some session liquidity. So we look on Wednesday. So notice how it's reaching here. It's also reaching the consequent encroachment of the highest high and lowest low of the PM session. And notice this 15 minutes fair value gap. Notice it. It's also confluencing with the first fair value gap at 131 from the PM session. This is a really nice trade. And then we have a second trade here. We see after price hits here, 1550 macro, we expect another run for liquidity. And notice how we formed this bearish breaker. Maybe we can see it even better on the 15-second chart. And now I can show 15-second chart. So before here was the 330. Just want to show this. So 3 days low, this one taken. Sell stops taken, 1, 2, 3 drives pattern. And then we have a fair value gap with a bullish breaker on the 15 seconds. So low, high, lower, low. Hit the bullish breaker. Hit the fair value gap. Order block. We go higher. This is the Wednesday close. This is the PM session low. And then here we have a lot of liquidity. So here is liquidity with these stops, buy stops. And then it stops at the first fair value gap consequent encroachment. 1550, we look for a move, we wait a little bit, and see how we form this bearish breaker I was showing on the 1 minute. It shows even better on the 15 seconds. So high, low, higher, high. Fair value gap doesn't get touched because the breaker is protecting it. And here we have some stops again. And then price comes lower, and notice how at 4:12 p.m. it touches perfectly the last 3 days low that we looked before. So very nice trade over here as well. Am I still recording? Yes, it looks good. Now let's see Thursday. I can use the same template. Let's see this one. Yeah, I have to clean it back again. So if we look, so Thursday, so we have day Wednesday as the previous day, and then we have the last 3 days. So Wednesday is the low, Tuesday is the high. It's kind of the same. This was another really nice trade, even though I was looking for a long here because we had like a lot of session liquidity. If we look on the 15 minutes, this was Thursday, and we went a lot. This was Thursday, and we went a lot down, and notice how it left like. So we had this relative equal highs. Like it just took them a little bit like on Monday, Tuesday, like Monday here, it took a little bit from, sorry, Tuesday took up from Monday, and then here, this was like really screaming for a long here. But price came just above it, and then it reversed like crazy lower. And then I was looking for a reversal on Thursday, but it didn't offer it to us. So the signs were there, but I was hoping for a long. So since I didn't get the long, I was not engaging in a trade. But we can backtest it and reverse to see how the signs were there. So here, I start seeing it failing. The first fair value gap on Wednesday. And here we had some SMT divergence. So if we look, what was the time? 15:05 to 15:29 on Thursday. Notice it's divergent. So NQ is weaker. Could that make a higher high like ES? So that was the first sign. And it was not enough for us to see a long. It's also the time when we anticipate a reversal. Also, notice how this, as I wrote here, is the 50% of the previous day and of the last 3 days. So if we look back in here. So price is like accumulating shorts here. We get the divergence signal with ES. So that is showing that the conditions are very probable for a short. And then we get the model. Notice like this, not the bearish breaker, the mitigation block. So this is like similar to the breaker, but instead of a high, low, higher, high, it has like a high, low, lower, high. In NQ, in ES is like a bearish breaker. And then here, you could enter a trade at the low of the first fair value gap. It would be nice that it doesn't come back above this place. So this is above the consequent encroachment of the first fair value gap on Wednesday, or even a more conservative stop loss will be like here. So it should leave this portion open. And it behaves like an ICT textbook. It touches the low, and then it comes lower. You can also see it on the 15 seconds. So see here how price is accumulating. The low here you could enter, and you could target the next first fair value gap below it, the Monday first fair value gap. So notice how price comes here. It's like a 20 handles move. It happens 15:36, 38, so it takes around 2 minutes for this move to happen. The price keeps wanting to go lower. And we see how price comes here at 15:46, just above the first fair value gap PM session from 1:30. If we see it over here, it's from Wednesday actually. So here we have it. So it doesn't take it. So it's very likely that it will take it now on the 350 macro. So see how on the 350 we have 10 more minutes for trade. Price comes up all the way to the 50% level of the Monday range, AM session range. So if we take 9:30 to 10, the lowest low and the highest high, and we take the 50% level, the price comes into a premium. I also have a fair value gap here. And we'll notice how the body is staying here inside this first fair value gap from Monday. And then price comes lower. And here we could actually have a very nice entry either here or a more conservative one here. We have a little volume imbalance. And this is the first fair value gap PM session of today. This one over here on the 1 minute. So here you could enter and you could target this one, that this swing low, and then we have the first fair value gap below. So this would be a trade for like 24 handles. So very, very nice trade over here. I think there was a 15 minutes fair value gap that we could have also aimed for. Let me see. So 15:30, this was the divergence. Yeah, it was this 15-minute fair value gap. So make it right. Put it here. Yeah, now it's good. So this could be the 15-minute fair value gap from 150. Take that in here. So here, this could have been what we aimed for. So as we see, we can enter here, the first fair value gap low, stop loss above here or above here. And then we can target all the way here. And it takes around from 34 to 45. So it takes around 11 minutes for this to pan out. This was a trade. Let's see about Friday. Friday, I usually don't like to trade if the week was good so far. Especially we had the holiday on Monday, the memorial. Today is like a holiday in the US. But here we have a small trade as well. So notice 1527, we take this relative equal lows. And then we have this first fair value gap with CB. The price comes here, and then you could enter here and target this one. And here we are, and this was Thursday. Yeah, this should be shifted. Let's see. So we don't really have these levels right now. Here it comes later at the 1550 macro. Yeah, here we could have targeted this level. But as we see, it was not a very nice day to trade. However, we still see the trade panning out. So 330, we took the sell stops, and we just have this small scalp, even up to here, like the 50% level of the previous. Oh, this is not anchored correctly. Sorry. Oh no, that's here. Yeah, this was not anchored. So this one was Thursday, and then this was Friday. So yeah, you could just aim from here till here, till this low, and it goes a little bit to the first fair value gap. See how this looks on the 15-second chart. So here, low, high, lower low, this CB. Here, see how perfectly it touches it, the CA, then another CB. You could just take these short scalps and notice how this is like a propulsion block. There's an order block and there's another order block inside an order block, and it comes here. Notice this volume imbalance here, how this wick is coming here. See this area extended to the right. Find support. We can target the swing high for a few handles. We like 6 to 17, so it gives us 10 handles. Then we have the CB. This is the PM range from Friday, between 1:30 to 2 p.m. We extend those levels. So yeah, so here's another swing we can target, and here is the previous day and the previous 3 days low, another target, and then here is the last target. And I think here is stopping at the consequent encroachment. And at 25% level, yeah. So here, just somewhere in between these two. So it's not touching it, so it's showing weakness, and then it's making the 22 model here. You see like high, low, higher, high, fair value gap. It goes a little bit into this one. We take that together with the volume imbalance, stays below the consequent encroachment, and then comes lower. It takes this sell side liquidity. Here is the 1550 macro, gives us another entry. Notice how here is relative equal highs, but this one doesn't take this one, so we can target it. Enter on the next candle. This is the low of the PM range, and then it comes here. So from here, 17 till 86, so you get another 20 handles. So I hope you enjoyed this one, and you can backtest this also on your own charts and see the 3:30 p.m. in action.